Peter, hello. Thank you very much for joining us today.
Yeah, nice meeting you.
Would you say this was a healthy slowdown in Chinese growth?
No, I think this is more or less in line with expectation. The slowing in CPI, slowing in industrial production, is what China wants to. Because from the first half of this year, we already see some credit tightening, which will slow down the economy. And this is in line with expectation.
Does that mean that there's a diminishing risk, Peter, of the Chinese economy overheating?
Now, definitely, with CPI actually coming at 2.9%, which is lower than market consensus, and we expect there will be further slowdown in the second half of this year. This will bring down the speculation, bring down the overheating problems in China, and I really expect China should start to consider loosening some loans in the future.
Yeah, how soon do you expect that to happen? How soon will China loosen maybe some of its bank lending restrictions?
And I expect the credit list loosening should start in the third quarter. And actually, there have been some news in different cities that some credit loosening has already started in the property market.
Are these the most stringent property controls that are being adjusted, or do we expect a wide array of property control measures to be adjusted?
I don't expect there will be a lot of changes in policies so soon. Probably China will take a wait-and-see attitude in the coming couple of months. But however, further tightening, further anti-speculation in the property market will probably take a hold before there will be further major policy changes to take place.
Do you think the economy, Peter, actually needs extra fiscal stimulus to boost domestic demand in the second half of the year?
From the coming months, I expect both the GDP growth, CPI, will come down slowly. So in order to maintain a long-term economic growth in China for later this year and next year, probably China should start to make some changes in the credit policy. Probably some easing should start right now.
Peter, what does it all mean for our stock market thinking? I mean, what should we be investing in right now?
Now, first of all, I think the market will have some initial negative reaction to this data because of the slower than expectation economic growth. However, this has been largely discounted in the first half of this year by seeing the underperformance of the China markets. So in the coming months, as people expect RMB to appreciate, the credit to loosen, probably they will come back to the China property market, and there will be some bank interest in the undervalued bank stocks too.
Peter, thanks for joining us today. Peter So there from CCBI.